think we are live on our various social media channels. So thank you everyone for taking time out of your busy schedule to join us today. We are going to be talking about choosing the correct form of organization. As a bit of housekeeping, if you were live here with us in Zoom, you can use the Q&A to ask questions throughout the webinar. We'll do our best to answer those as we go. If we get to the end of the session and there's no additional Q&As that we haven't covered, I'll take a last look through the chat. If you're joining us live on any of our various social media channels, you can post a comment to whatever channel you're in, and my colleagues will do their best to relay those questions over to us live in the webinar so we can answer them for you. And of course, if we happen to miss any of those questions, we'll go back through the social media channels and respond to all the questions and comments. So without further ado, let's kick off about choosing your best form of organization. And this is really targeted at independent contractors who are trying to make the decision, do I remain as a T4 employee? Do I consider going as a sole proprietorship? Or do I go all out with incorporating a new separate corporate structure? And hopefully we'll answer that question for you today and make it an easy decision. Plus, we'll give you some additional tools where you can go on our website to do a financial comparison to see what the bottom line will be as far as what's in your pocket by comparing one specific example against another. So a little background on ourselves. My name is Andrew Wall. I'm the managing partner here at CPA4IT. We're recognized as one of the top 50 cloud accountants in North America, not just Canada. Woohoo! We've been specializing in information technologists and independent contractors, which also includes now doctors and realtors, since the early 1980s when my father, George Wall, founded the firm. We're also a member of the National Association of Computer Consulting Businesses, which is a lobby group of all the major staffing agencies. I'm a registered lobbyist. We help fight for your rights within our provincial governments, our federal governments, and doing everything we can to stand up and fight for the rights of independent contractors. And lastly, we are an ISO 9001 registered firm, which for those of you who are not familiar with ISO, that basically means we have systems, we have processes that have been developed since 1984, and those are externally audited every year by someone who comes in to make sure that we're not only doing what we say we do, but that we're constantly striving for never-ending improvement. So that's all I'll say about us before I jump right into our session today. And obviously the key points that we're going to be covering is the importance of choosing the right structure, the introductions to the various structures, and their various pros and cons. So choosing the right structure is absolutely critical, because if you choose the wrong structure, it can have liability considerations, tax implications, issues around succession planning and future-proofing your business. So basically, an ounce of prevention is worth a pound of cure. So if you make sure that you're set up and structured correctly from day one, you're going to reap the greatest rewards. It's not to say that if you go in and you start with the wrong structure and you choose to change that structure down the road, you can't. It just usually means that you've missed out on some potential opportunities, and there's going to be costs to revising your structure. And we'll talk about some of those specifics as we go through one by one each of these various structures. So first, let's talk overview of what the different structures are. We've got T4 employee, where you're just working as a salaried employee. You receive a T4 slip at the end of the year. You've also got a sole proprietorship, which means you're working as an independent contractor, but it's, one individual. All the income that you receive is taxed personally, and you can deduct expenses against that income, which is a big step above being a T4 employee, where your only real option is maybe a T2200. But the incorporation is really going to be where you have the most amount of options available to you. It does come with the process of creating a separate legal entity or a corporation and having to file tax returns for that corporation. So a corporation is a living entity. It has a birth, which is articles of incorporation. It has a birthday, which is its corporate year-end filings, and it has a death, which is an article of dissolution. Now, that death could be well beyond your individual years and last for multiple generations, and that's a little bit advanced for today's structure. But what it's going to bring you is the most amount of options and flexibility. Now, it is worth noting that there is a fourth option that we debated whether to even include on this slide, because we strongly advocate against not using this structure. And this is a partnership structure, which is very similar to a sole proprietorship. It's a complicated personal tax return, but it's not a separate legal entity. What it does mean is you would have, let's say, two partners. Each partner would share in the revenue and the expenses. And the reason that we don't like that structure is because either partner can legally bind the other partner. You can make commitments to debtors, you can borrow money, you can do all sorts of things, and your partner is then on the hook for that responsibility. And of course, it doesn't have all the bells and whistles that go along with the corporation, which is the separate legal entity that we talked about. Now, getting into the weeds of the individual options that you have available. So with a T4 employee, the benefit is it's easy, right? There's no real thinking. It's very simplified tax filing where you have a T4 and maybe an RSP and maybe a T2200 depending upon your employer. T2200 is something that allows employees to deduct a very limited set of expenses, but it's not going to give you the full deduction of expenses that you can have with a sole proprietorship or an incorporated entity. One of the pros and cons is that you're eligible for EI contributions, which means that you could receive EI, but it means you're also paying into it. And if you're never going to collect it, that's money you're paying into it and never going to receive a benefit. Typically, you've got a whole slew of benefits packages, which might include medical, dental, maybe an RSP matching, some sick and vacation pay, all the typical benefits that go along with being an employee. Now, those benefits sound great, but you are typically overpaying for those as an employee versus what you could replicate those for if you were self-insuring or giving yourself your own benefits packages. And when you look at the comp rates of a T4 salaried employee versus, a independent contractor, whether that's a sole proprietorship or an incorporated, you're typically going to get a higher comp package or higher hourly rate as an independent contractor. And that's because the employer doesn't have to pay for their share of the EI and the CPP, the medical and dental benefits that they have, the sick and vacation pay. And by allowing you to get more of an hourly rate, you can choose to self-insure for those things. And in many situations, employees might have a spouse contractors might have a spouse who have a benefits package from their own full-time employment where you can reap the rewards of all those benefit packages and not pay anything. Now, you've got on the con side, the fixed tax brackets and tax rates, which can be really high. So, you're talking the highest tax rate in Ontario, over 53%, versus the corporate tax rate, which can be as low as 12.2%. You're very limited in what you can deduct. We say you can't deduct expenses here. It's not entirely true. If you had a T2200, there may be some minimal expenses that you could claim. But the bottom line is you're going to be paying substantially more in taxes as an employee versus an independent contractor. And the taxes are where you reap the rewards. And that's what makes this a win-win situation for both employers and independent contractors. So the employers, they probably have very similar costs because they're going to pay you a little bit more, but they don't have to pay for the medical and dental benefits. You're making a little bit more, but you're paying substantially less tax on what you're making because you can deduct expenses against that top line revenue, which you can't do as an employee. And many of these expenses are expenses that you would have whether you were an employee or an independent contractor working as either a sole proprietorship or incorporated. You can think you're going to have home office expenses, telephone and internet, automobile expenses. All these are costs that you would have that you just wouldn't be able to deduct as an employee, that if you go the route of an independent contractor, you could claim as a deductible expense. So looking at our first structure for independent contractors is the sole proprietorship. Again, the benefit here is they're relatively simple and inexpensive to set up. All you need to do is register for an HST number, assuming that you're going to make more than $30,000 a year. Now, caveat to that is, even if you're making less than $30,000 a year, I highly recommend setting up and creating a HST account number, even though you're not obligated to, because a little known fact is that you make money with GST, HST. Because if you're under $400,000 a year in revenue, you can elect for the quick method of HST, which means that you collect 13%. And if you're under 30,000, you only pay the government 7.8%, which means that you get to keep that delta between the 13% and the 7.8%, and that goes right into your pocket, which is nice. Now, you do get to deduct expenses here. For the most part, very similar to what you can deduct in the corporation. There are a few more requirements for home office and automobile that aren't quite the same in a corporation and are more favorable in a corporation than they are in a sole proprietorship, but you can still deduct telephone and internet, home office, computer supplies, all those other things that we talked about earlier. And you can even do income splitting before taxes. So if you had a spouse or children that you were looking to do some income splitting with, you do have the potential to do that. Now, the downsides here is that you've got unlimited liability. They can come after you, creditors or clients. If there's ever an issue, they can come after you. There's no limited liability. You are required to pay EI premiums, as well as both sides of CPP and EI. And again, with the EI, if you're paying into it and never collecting it, it's not really a benefit for you. And most importantly, that any income that you have after you've deducted expenses becomes taxable in the year in which you earn that income. So you have no ability to smooth income over multiple years, no ability to leave money in a separate corporate structure where you're taxed at a lower rate and use that as a retirement savings vehicle. And you do lastly have a very limited marketability. And what we mean by that is there's many end clients that just will not work with sole proprietorships because there's increased risk for themselves and potentially for yourself around some of these CPP and EI stipulations. So, in the right circumstance, this can make sense. And at the end of the day, if you're not having any ability to save money and you're spending all the money that you're earning, a sole proprietorship may work for you. Now, on the flip side of that, if you do have the ability to save money and leave it somewhere, one of the best places to leave it is in an incorporated entity. And the benefits of setting up an incorporation is you have limited liability. You do not have to pay EI premiums. You can opt into it. But again, we've done the math because when you first got the ability to opt into EI with corporations as an owner manager, we had many people who were wondering whether it made sense to opt into EI so that they could get, parental leaves and parental benefits. And we've done the calculations. It's not worth it. You'll have to pay into it more than you'll ever get out of it. And for most people, EI is a net loss for them, and you'll pay far more into it than you'll ever receive out of it, which is why it's far better to take that money, set it aside, put it into savings, and invest it for yourself. Again, as we mentioned earlier, you're typically going to get a higher hourly rate as a independent contractor versus a T4 employee. And in fact, you'll often also get a higher hourly rate as a incorporated entity than even a sole proprietor. And that's simply because if you are going as a sole proprietor, they're typically going to create a T4A for you or a T4 so that the agency is withholding and remitting CPP and EI, which is the risk that they would be liable for if you were deemed to be a if you were not deemed to be an independent contractor. You've got this increased marketability, which we talked about earlier, and being able to work with more agencies across the board, which means more job opportunities. And you've also got this low corporate tax rate, which here in Ontario is only 12.2% on the first $50,000, which is an amazing option to be able to have more money pre-tax, more money post-tax, which, if you're looking at 12.2% versus 53%, and now you've got, 88 cents on the dollar to invest versus 47 cents on the dollar to invest, that's going to grow and compound substantially faster. You've also got income splitting as an opportunity available to you in both salaries and dividends. Unfortunately, their lovely Liberals did take away some of the benefits of income splitting through the use of dividends years ago with the TOSI or tax on split income rules that they put into place. But you can still do income splitting through the use of salaries, and in limited situations, you can still do income splitting through dividends, which is why it's, again, imperative to make sure that if you do go the route of incorporation, that it is set up and structured properly. I know there's a lot of free and cheap resources online now. I highly, highly recommend, whether you use us or use another professional firm, that you use a professional firm. And I would recommend a tax firm rather than a legal firm, because getting the tax structure right is far more important than any legal issues you are going to face as an independent contractor. Now, there's a whole bunch of other strategies which we'll cover briefly in the next slide. But really the only downsides to setting up a corporation is the cost of setting up and maintaining it, because you are going to have a cost at the very least for articles of incorporation, which, even if you're going through one of the quote unquote free resources, it's not free because there are government filing fees that you'd have to pay. You can also really set up the corporation incorrectly that could cost you substantially down the road. And if you structured it wrong, you could lose out on a lot of the benefits that we're going to talk about in our next slide. But assuming you set it up correctly, and you're doing it with a professional who knows what they're doing, you're going to have a corporate entity structure that's going to allow you to save substantially more than the setup and maintenance costs that we've got. And typically what I tell people is, if you're saving more than about $10,000 a year, going and setting up a corporation versus a sole proprietor is going to pay for itself just in the tax savings that you're going to get by being able to leave money inside your corporation, have it taxed at this 12.2%, invest, grow, and use it as a retirement savings vehicle. Now, some of the other tax strategies that we have available, and I'm not going to go into these in detail because we do have an entire webinar that you can find on our YouTube channel, which is called the Top 10 Tax Strategies for Your Corporation. But these include the low corporate tax rate, which we've talked about, the ability to take loans from your business for either the purchase of a home or the purchase of a car, or even the purchase of a boat. You can do income splitting, which we've talked about. You can do income smoothing, which is the ability to defer and carry balances or loans from one year to the next, to give you a little bit more flexibility and structure, which also comes down with tax deferral. And generally speaking, if you can defer when you pay taxes, you're better off in any situation. And it does look like we've got our first question, so I'm going to pause here and see what we've got here. I have some dividend income from my stock account. Is 15% self-employment applicable for dividends, income, capital gain? If I put this into a sole prop, I get a loan at 13 to 15% interest to trade, and I want to write it off. Dividends include ordinary and qualified. So dividend income is taxed differently than what we call active business income, which would be the consulting income. It's going to be taxed personally different than it would be as far as your consulting income as well. So they're going to be taxed similarly in a corporation as an individual. The difference is, with an individual, it goes into a special holding account, which is called a recoverable dividend tax on hand. So any taxes that you pay are recoverable taxes, and you get those back when you issue a dividend to an individual. So it will eventually flow out to you and get taxed the exact same. Now, I'm not sure I'm following the question about the loan. I suspect what you mean there is you're using a margin account. And you can set up a margin account both in a corporation and personally. You cannot do margin accounts in any registered accounts like a tax-free savings account, an RRSP, or anything along those lines. But you can do margin accounts where you can get a loan to be able to invest in those accounts effectively. I assume that's what you mean by the loan. But the dividend income itself is not considered active income. It's considered passive income, and it is taxed differently. So it wouldn't be at that 12.2%. So I hope that answers your question. And what you're going to get again with the corporation is the ability to do a tax deferral. As we talked about, there's a number of different strategies that we can use to defer tax. And the bottom line of why a tax deferral is good for you is because the longer you have access to the money, the more that you can earn with that money. And that's what we call the time value of money. You could invest that in stocks or dividend yielding stocks, or anything, as opposed to giving it to the government and letting them earn interest with it. And there's a number of strategies that we can use for tax deferral. Again, check out our longer session. There's a number of different insurance strategies, from ICE maneuvers, and where you borrow against an insurance policy and are able to pull money out tax-free from your corporation. Strategies for just reducing tax, because with a life insurance policy, the benefits that you receive go into a special account, which is called a capital dividend account, which you receive to shareholders as a capital dividend, which is completely tax-free. You've got things like pension plans, which are like RSPs on steroids. You've got the capital gains exemption, which if you ever sell the shares of your business, you can get over $800,000 tax-free for the sale of that company. We can structure holding companies so that we can make sure if you do have passive income like dividends and capital gains, that we can structure that so that we reduce that income with your various expenses to eliminate the tax on that, and keep more of the passive income being taxed. So we've got all sorts of little strategies like that. And then as we mentioned, with a corporation, you have the ability to issue or declare dividends to your shareholders that you do not have available to you as a sole proprietorship. So that is the long and short of the benefits, pros and cons of the different tax strategies that are available, or different corporate tax structures that are available if you're considering incorporating a business. Now, if you have more questions, again, feel free to post them here. We're happy to answer them as we go. But we do also offer a free initial consultation where you can come in, speak with one of our representatives, talk through your individual situation to see whether corporation, sole proprietorship, or T4 is better for you. We do also have two calculators on our website. We've got a T4 versus Inc. calculator, and we've got a sole prop versus Inc. calculator, where you can go in and put in the salary and the benefits that you're going to receive as a T4 and compare it to what you would get as an incorporated entity to see, bottom line, what is the financial benefit that you're going to receive by going the route of incorporation. And then we've also got a sole prop versus corporation that compares those two scenarios as well. We do also offer an in-house paralegal firm, so we can do the whole corporation setup, the annual returns, the corporation returns, and if it gets to that point, a dissolution. But really what makes us unique and special are our proprietary tools, which include an industry benchmark, where we'll run through your revenue and expenses. And this will identify areas where you're below the average, which means there's likely expenses that you're incurring that you didn't realize you could deduct. And we'll ask you some questions to see if we can maximize those deductions. Or on the flip side of that, you're above the average and you're potentially going to be red flagged for an audit from CRA. So that allows us to ask the questions up front to make sure that we're willing to, risk running that red flag in exchange for the benefits that we're getting, and that make sure that we've got the documentation in place so that should they come knocking, we're prepared. Because if you do get an audit, if you're prepared, they don't have to be these big scary things. And to that end, we do offer audit representation protection, which means that if you are audited for any of the work that we've prepared for you, that will represent you up until the third and final stages of appeals at no additional cost to you. And having someone in your corner who knows your rights and fighting for you really improves your probability. But the key thing here with audit is you've got to keep your documentation, because there's only so much we can do as your accountants advocating for your rights if you haven't kept the appropriate documentation. And then lastly, as I said earlier, we've been specializing in this industry since 1984. We are arguably some of the most knowledgeable around personal service business risk, which is the risk that you will be deemed not an independent contractor, but rather an employee, and you could lose all these amazing benefits that we talked about. The good news is that we have a perfect track record. We have never had one of our clients deemed to be a PSB. We have many assessed, and there was whole projects, and we have fought, very hard for the rights of independent contractors to be deemed independent contractors, not personal service businesses. And again, that's where a lot of our lobby work comes down, in educating our government on why independent contractors are an industry we should support, and why they're different from full-time employees. So I hope you guys found this helpful. If you do have more questions, again, I encourage you to check out our website and our various social media channels. We do webinars like this every 2 weeks. We've also got a webinar a podcast that we do on artificial intelligence that we also do every 2 weeks. And we put out new content on a daily basis across Twitter, LinkedIn, Instagram, and all of the various social media channels. So I encourage you to go check us out and see if there's any information that you might find helpful there. And like I said, I'll open it up to Q&A here. And if we don't get any further questions, I will wrap us early and give you guys back more of your lunchtime so you can go out and enjoy this beautiful weather we've got today. Awesome. Well, thank you everyone for joining us, and I wish you a happy Tuesday. Bye for now.